Hi, and welcome to another episode of 2 Minutes on Tuesday. This week we're going to talk about the misconception of being able to buy a bank-owned foreclosure or a fixer-upper. Now I'm going to begin, you've heard me say if you've been following 2 Minutes on Tuesday, one of the most important things as a buyer that you can do is to get pre-approved in advance so that you know what type of loan program best suits your needs. And also to know what price range home you're going to qualify for and what price you should be shopping for. That's critical. You need to know that. But you also need to know if there's any condition requirements that the home needs to meet. And I'll give you an example. A lot of these foreclosures and repossessions and fixer-uppers, it might be in a price range where you clearly qualify that you can afford to buy. But if the condition of the home is in bad shape or it doesn't have the fundamentals, like it doesn't have a kitchen, the odds of you being able to get a loan without putting a kitchen in advance is really low. Now, there are ways to do it. We can set you up with a rehab loan, like a 203K FHA loan. We can do a construction loan. There are things that can be done. We can also put you in contact with a lender that doesn't sell the loan, meaning they keep the loan in-house, so they've got more flexibility. A lot of the mortgage companies that sell their loans off right away, the house has to meet the lender's guidelines on day one, the day that you close. And the reason that that's important is they have to send an appraiser out and make sure that the water's on, the furnace is on, the electric's on, and things are working. In a lot of these bank-owned foreclosures, there hasn't been utilities turned on this property in 6 months to a year. Sometimes, if the house had a sump pump in the basement and the power got turned off, the water could have came in the sump pump and literally flooded the basement. So there's sometimes cleanup or damage that needs to be taken care of before you're able to obtain a traditional loan to buy that home. Now, the reason I bring this up is we've got opportunities for you if you're interested specifically in bank-owned or foreclosure or buying a fixer-upper. We've got a different type of loan product that will set you up with. So just because you're pre-approved for a certain price range doesn't mean if the house needs rebuild or extensive work that the lender's going to want to give you a loan on that house unless that house is brought up to the minimum standards of that loan program. So I just thought this would be interesting for you to know. There's a few more bank-owned homes that are popping on the market, and we're getting buyers are asking us, hey, you know, how does this work? And I thought it was a really good topic to talk about this week. So if you're interested in those types of properties, definitely give us a call. We'll give you good advice and put you in touch with a lender that specializes in those types of loans, or they can set you up with a rehab or a construction loan. And when I say construction loan, it's not like you're going to build a brand new home, but you'll be able to borrow money to make the improvements to the home. And then once those improvements are complete, you can put a permanent mortgage against the property. So it'd save you some money in the long run, and you could remodel the house the way you'd like it. So I'm Sam Miller. Thanks for tuning in this week to 2 Minutes on Tuesday. Hope you're having a great day. See ya. Bye.